There is so much noise out there today. Sometimes you just need to mute it and focus on what's important, the data. Stay tuned, lots to talk about. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links on today's video. Also, if you're looking for a different opinion, that of Wall Street and BTV, please do consider subscribing. Also, as it pertains to subscribing, thank you so much. We've had well over 400 new subscribers in the last month. We do appreciate you joining us. Today's agenda: big charts, treasuries, current signals, what keeps me up at night. Of course, we will discuss oil after what happened this weekend, on my radar with our game plan going forward, and what does this all mean to you as an investor. Let's go to the big charts. All right, first up, S&P Index daily chart. Why? Because everybody knows the S&P, but please, the market is much bigger than that. We will discuss. So what do we see here? 2 weeks ago on our video, we talked about this box forming. Could go either way. Well, it went up, okay? What did it go up on? Nothing. Absolutely nothing. Trade, China, no. Everyone knows this is not going to happen. We went up on false pretenses in my idea. Volume, of course, was declining. Momentum is up. And then we're hanging there at 15 on the VIX. So really nothing has changed for me. This is positive today. Don't forget, every week we release those. They can change on a day's notice. Most importantly, I do not make changes on daily charts. And one of the reasons is when you look here a little bit closer and what's been going on, right? We were stuck in this box. And now I'm not surprised that although we are positive, I have a negative view that we're going to end back in the box here before you know it. Next up is our weekly chart. Any change? Not really. We're still haven't had a true positive turnover there on momentum, MACD. I have a video up here on what that means, and you can see that wedge. That wedge is going to be answered. I mean, we're barely in it right now, so let's see what happens. We'll wait till the end of the month, but as of today, that is still negative. And then our last one is our monthly view, which gives us an idea for the long-term picture. And I think we've spoken about this before for new viewers. You have to be careful here, okay? So yeah, we're up here in all-time highs, right around them, but this is the most important part of it. Relative strength of the market. Each time we've hit highs, it's been a series of lower highs. That is called negative divergence. That is another reason why I continue to be negative on the long term. Now, to take a quick picture in the background, whoa, look at all that information there. What you look for is behind the scenes is what's happening. This shows, I know there's a lot here, advanced stocks minus not declining stocks divided by total issues. So the S&P, highs minus lows divided by 500, okay? And when you look over here, the most recent time, look at that weakness. The weakness is unbelievable across the board in all aspects. We're just not seeing that surge. Another reason why I still don't believe the most recent move up to the top. So real quick on treasuries. Yes, we had a big move to the downside, and we just had a big move to the upside. When you're looking at where we are from just a couple weeks ago, real big move, okay? Now that being said, has anything changed as far as I'm concerned? No, okay? We trimmed our treasury position about a month or so ago. Now, for new clients, I bought into it last week, and I might add as we go into this week because, again, when you look at everything that's going on, I still believe we go lower again on treasuries. Okay, so first up on what keeps me up at night, I have added oil because of what happened this weekend. Iran bombed Saudi Arabia, one of their refineries. Not only their largest refinery, the world's largest refinery. This is big-time geopolitical risk. Had an opportunity to be in a webinar this morning with a energy specialist. Great call. Bottom line is retaliation is going to come. So oil right now, this does not update during the day, but we know it's up 10% roughly today, okay? But be careful, folks. You're still in a downtrend here, all right? I am personally going to stay away from oil. When you have this type of geopolitical risk, you got to be careful. So this is a big deal. There's a lot of talk here. Did Russia push Iran to do it? Is China behind it? Who does the Saudi work with? Do they do it themselves? Do they work with their allies like the U.S. to combat and, in fact, retaliate? So really got to continue to watch what's going on in this sector. Let me move over to some of my daily data points. As I said in my opening, data, most important part. You can't just look at this market. It's gone up with what? Not the data, that's for sure, after you see this. We peaked in Q3 2018. You can see it all green, good numbers, and we've gone down from there. Just wait another 5 weeks for earnings. All this stuff that's going on, it is going to be worse. So you can stop, pause this. Look, retail, headline retail, industrial production, you name it, we have peaked. Next up, here's our earnings and sales growth. Same thing. Obviously, if we feel we peaked in earnings. When you buy a stock, when you buy the market, when you buy an index through an ETF, you're buying based on future earnings and growth. We have peaked again. Wait until we get to the next quarter. Now, some of the data when we look at it. CPI, PPI. This is what the Fed has been looking for. So we have, in fact, had a turn up on inflation. That is the next part of our cycle that we are expecting. How about auto sales? You can kind of see that slow line grind down. Really have not had big auto sales. Most importantly, look here. This is auto delinquencies, okay? We are now back at levels of 2009. What does that mean to you as an investor? People are starting to have problems paying their bills, right? I mean, this is the kind of data that we look at every day. Manufacturing activity is likely to remain underwhelming. This shows recession in gray, ISM manufacturing new orders, durable goods, and as they say, the trend is not your friend. That is a big sign, manufacturing, okay? From there, we can look at small business optimism. Same thing. When did we peak? Third quarter, 2018. We've gone down. We're flooding around this area here. Again, not another good chart. Now, here's the most important thing. Every morning I go through, I have a journal. It's a digital journal on my iPad. I track everything from around the world. You look at it. This is this morning's information. All these reds, pause. All right, did you get that? All these reds, most of it is China, but let me go here. China, industrial production, right here. Okay, where's my number? Right there. Their number right there is a 17-year low. Okay? This is all China data right here. They are struggling, but keep in mind, they're not going to make a deal. They'll just keep throwing money at it. They're struggling big time. This is the kind of data that I see every single day that keeps me up at night. Let's go to what's on my radar. All right, wrapping things up here. On my radar, couple things. I keep talking about healthcare. It just can't get out of its own way. it is stuck. If you look here, this blue line is your 50-day moving average. That's number one. It does not want to go above that. I think healthcare is a good sector in this part of this cycle, but again, it's just not doing that. The other thing is, if you follow this, there's your trend line. Same thing. Can't break that trend line, but hopefully we will see a breakout shortly. I'm going to talk about gold again. All right. Why? Last week had some people saying, how come we're not selling gold right now? I actually sold, cut my position about a month ago, and then added last week. Why? In our last video, I was looking for the pullback. We got that pullback right here, right? So part of our process is discipline. You set a price target and you go with it. Now, this is the gold index, if you will. It's not updating, but I'll tell you, between last week and then today, it's up almost 1% this morning alone. So I like gold going forward, and gold wouldn't be up, okay, going back to treasuries, if people don't think treasuries are going down. Those two are correlated very much so. Now, the next one and last one has been a big surprise here. This is the large value index. My core holding is split between large cap growth and large value. Those are two of my biggest positions. And when you look, it's done really nothing, okay? It's been stuck in a rut. Yeah, it's gone up year to date like a lot of things, but it has really gone nowhere. All of a sudden last week, a lot of talk about this, another change in the cycle, a rotation out of high beta growth into more value-oriented plays. Now, again, this is the index. From here to here with our holding, we're up well over 10% in 1 week. That's the kind of move, week and a half, that you can have. That's why you have to have patience, right? If you believe, you have the conviction, you've got it in there. So this has helped us over the last couple weeks. Wrapping things up, fear and greed. All right, big move here in fear and greed. No surprise. Everyone has gotten greedy again. FOMO, fear of missing out. All CNBC has talked about is buy, with no fundamentals or data behind it. So it's not surprising to see our greed at 75 when just 2 weeks ago we were at 23. Calculations for that are below. Now, wrapping it here, indicators, positive short term with a negative bias, and two others are negative. What does that mean to you as an investor? I am staying put. I'm waiting unless I see that window there for treasuries, and I'll add to that position. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.